What's poppin', everybody? Welcome to another video. I'm bringing y'all a pretty highly anticipated video, a video that you guys have asked me to make. And so I'm bringing it to y'all. I'm going to be dissecting market maker buy and sell models, exactly what it means, exactly what it is, the ins and outs, and everything that you need to know in the most simplest form possible. Now, it may not look simple. I know this looks like a lot on my chart right now. This might look a little confusing. But I'm going to break it down. I'm going to break everything down step by step. So let's get right into it. I want this to be a fast and easy to understand video. So let's get right to it. So first, we're going to focus on right here why the markets move, essentially. And it's for these things right here. For one, to hunt liquidity. Usually there will be a manipulation prior to this. We'll get into that more so in depth later on. For two, to generate liquidity, accumulation or low/high resistance liquidity runs. I will also get into these if you do not know what they are. But yes, generate liquidity. And then number three is to rebalance, to either imbalances, equilibrium, standard deviation ranges, whatever the case may be. I'm gonna break it all down. So let's get right into it. First of all, we have right here basically what a market maker model will look like. This will be sell side of the curve. This will be known as sell side of the curve, and this is known as buy side of the curve. Now, essentially what sell side of the curve in this scenario is we're generating buys. No way, I spelled that wrong. I'm bad. I gotta fix that. We're gonna be generating buy side liquidity, and as you can see, an easy way to recognize this is when we have equal highs being left, when every high, when every high that's getting put in is lower than the previous one. Every high is not sweeping the one above it. You're not seeing highs put in like this. You're seeing equal highs. The highs are not being swept above it. We're creating lower highs and we're trending down without sweeping each other. That is how you know we're likely in a sell model and generation of buy side liquidity. Another thing you need to note, this can happen on any time frame. This can be the 1 minute, the 5 minute, the 15 minute, the hourly, the 4 hour, the daily, the weekly, whatever the case may be. You can find this, the 15-second, on any time frame that you want. That's another thing. But yes, you can recognize this when you see price putting in equal highs, relative equal highs, lower resistance liquidity. This is what this would be known as, lower resistance liquidity, because these highs are not taking each other, and this is generating buy side to be taken later on. Now, oftentimes you will see us end up taking out some form of sell side in prior to the reversal. We'll take out sell side, tap a high time for PDRA, which can be an order block, fair value gap, standard deviation range, whatever the case may be. And this is where you'll get the first sign of reversal. Now, another thing right here, y'all see I have these lines marked out. You might question what this is. This is standard deviation. Usually I will mark standard deviation from the last manipulation leg, or the last just strong leg prior to the reversal. In this case, it would be this right here, because this move is what sparked the reversal. So as you can see, I measured out standard deviation. It aligns perfectly with the sell side liquidity plus the higher time frame fair value gap, which is what we're trading off of. Oftentimes, you can anticipate reversals from this 2 to 2.5 range. You can even anticipate a reversal from negative 3.5 to even negative 4. Oftentimes, price will respect these price levels because we usually align with important areas in price. So yes, you see standard deviation marked out. Price is often going to hunt wherever these levels align at, and you can see we have sell side resting, a high time frame fair value gap, very strong drawn liquidity, very strong area of interest where price is likely to bounce from. I often like to refer to relative equal highs as well in these low resistance liquidity runs as very strong magnets for price. So oftentimes when you see situations, like this, oftentimes you will see price target those, and when we do, it will be fast and efficiently. So yes, getting into the reversal. The reversal essentially will oftentimes be sparked once we tap that imbalance. You might see an SMT with ES or NQ, and if you do not know what an SMT is, let's do a quick SMT master class. An SMT is essentially when, let's say this is NQ. NQ puts in a lower high, and I'm trying to do this fast, my bad. And let's say this is ES. ES puts in a higher high. This can be correlated with ES and NQ. You can add YM into the mix. I don't usually look at YM too much, but essentially this is what it is. When one of the two indices have a cracking correlation, because they are supposed to be moving in correlation to each other. So when we have a cracking correlation, when you can see price break its context or break what the other one is doing, oftentimes this can be a sign of reversal, a sign that we are about to get some type of move. And oftentimes they are very accurate when they are prominent and when they are in areas of interest as well. So in this case right here, we have the SMT tapping into the higher time frame PDRA. We have either an inversion fair value gap or a fair value gap created. This is very important because if we create a fair value gap or we get an inversion fair value gap, oftentimes this is a sign that price is ready to move and we're about to make that move. Often for me, my entry model is usually a inversion fair value gap plus a change in the state. I like to see a fair value gap created as well, usually creating a BPR, which is known as a balanced price range, essentially where a bearish fair value gap is overlapping with a bullish fair value gap. I'll show y'all an example of everything I'm talking about in a second. So yes, essentially this would be your reversal. Some people will enter directly off the SMT. Once they see the SMT put in, they'll enter that with a 5-point stop. Some people will enter off the inversion, the change in the state, the tap back. It's really whatever works for you. Me personally, I like to enter straight off of the inversion plus change in the state. This is my A+ model, stop at the low. And I'm targeting usually the resting buy side. I'll probably go break even or take partials once we hit these relative equal highs. Like to see a continuation, and I'll even mark out standard deviation for y'all so y'all can see right here. Standard deviation does align with buy side liquidity. Usually I'll let a runner run to that as well, etc. So that will be my entry model right there. This is now going to be buy side of the curve where you see price looking to reverse and take out all the generated liquidity. Now, once we take that generated liquidity, you can oftentimes see a manipulation, which is why they say once the model is done, if price moves without you and we take any major buy or sell side level, it's best to just walk away because you will oftentimes see price begin to accumulate. And this is where we'll make our decision for the rest of the day, whether or not we want to continue to expand higher, we want to reverse back lower. Oftentimes this will happen an hour or 2 hours later after we already have taken that initial buy side level once the initial model is done in regards to New York Open. Now, I'm going to do another rundown just to kind of briefly refresh everything. So first of all, you have standard deviation where price is usually hunting to. Price is hunting liquidity, trying to rebalance equilibrium. Standard deviation markout aligns with the higher time frame P area that we want to rebalance to. And from there, once we rebalance into it, we also sub some form of sell side that was resting right above it. We put in an SMT, create an inversion fair value gap. And then this is your reversal indication. This is now where you look to see buy side of the curve at. You see buy side of the curve, oftentimes is where you want to get in at. You can even get in on some type of reversal play here as well, or up here. If the market gives you the opportunity to, you can definitely take that and still make money. You don't need to bottom tick. You don't need to catch the initial bottom move. If you can recognize what side of the curve that we're in or what part of the model that we're in right now at the moment, you can make money regardless. You don't need to always bottom tick this. Now, this is also relative and it is transmittable to a sell model as well. Same exact thing. You would just reverse it, buy and sell side, same thing. Now, I'm going to show you an example of a trade that I took from Thursday, which literally is exactly this. And in all irony, it is exactly this, and I'm going to break it all down to y'all. So one more time, though, this is essentially what you're going to be looking for, just being able to recognize whether or not we are in buy or sell side of the curve. You oftentimes see manipulation or accumulation, some type of manipulation into the distribution, power of three, all of this stuff. Every ICT concept is basically the same. It's just classified as different things. So yeah, that is basically that. Now, the model that I want to talk about from the other day, that the trade I took came on Thursday. Now, right here, you can see on the hourly chart, if y'all watch the trade recap, I did say I was bullish. We ended up tapping standard deviation of this wick right here, which is what this dotted line is. Tap standard deviation of this hourly wick inside of the hourly fair value, a very strong area of interest where price is likely to reject from. We also put in an SMT at these lows, another thing that I'm looking for. So now from there, we zoom in, and I'm going to rewind a little bit. As y'all can see right here, this is sell side of the curve. Why is it sell side of the curve? Price is rebalancing. We're not taking out any previous high. Oh wait, I went too far, my bad. Price is rebalancing. We're not taking out the previous highs. We're just continuing to make lower highs. As you can see, this will be a lower high. This is a lower high. And now we have now tapped the higher time frame area of interest. We also have this resting buy side level up here, which is the ultimate target. From there, we tap the area of interest. You see on the 3 minute, we had an inversion fair value gap. Now, we also formed a fair value gap, which is then making a BPR, exactly what I talked about earlier. Balanced price range with two fair value gaps over top of each other. Oftentimes, these will be strong trampolines for price. But what I mean by trampoline is we're going to spring, we're going to jump. We're going to have a fast, efficient move from here. So I entered long. My fill was like right here, I want to say, when I did end up taking this trade on Thursday, with my stop at this low. targeting this level of buy side. Now we did not get the change in the state here, but once we did get the change in the state, that's when I added the rest of my position right here. I added my initial position on the initial inversion, and then I added the rest once we got the change in the state. Now with this model right here, there was an earlier entry that I do know some people did take. For me personally, I like to always rely on the higher time frame. I like to always, it's not gonna give it to me right now. All right, whatever. This is the change in the state though, this dotted line. I like to always wait for the highest time frame. Now we did have a 1 minute, this exact model only 1 minute. I just wanted to wait a little bit more for more confirmation because we were tapping into bearish for value gaps at the moment. But this was literally the same exact thing on the 1 minute inversion. BPR formed, changing the state, came down, respected it, skyrocketed price, and then from there, I went break even once we tapped this high. Straight up from there. This is literally, that is buy side of the curve, and as you can see, once we did end up taking it, we actually show y'all standard deviation. So then I'm taking it. We tap standard deviation. No, we tap standard deviation to Asia dealing range from this situation. Actually, I want to show you. And Asia dealing range standard deviation is just another area where price is likely to reject from. And as y'all can see, we came very close to that. That was my actual target from this trade. I ended up getting out right there. I wanted to leave a runner to that point, but we didn't get that. But Asia dealing range is essentially just, you mark it out the same way you would mark it on any type of manipulation leg, and oftentimes you'll see price react and reject from there. Now that is kind of more an advanced concept, not something that you need to really work or look for all the time, but it can be helpful if it aligns with your drawing liquidity and can give you more confidence in your trades. But as you can see here, kind of chopped in line, manipulated a little bit until price finally made its decision on what it wanted to do later on in the day. If I don't even know if it did for real. Let's just play it out right quick and see, because literally we've been in the same box, and then later on, as I can see, we kind of rebalanced back into the range, and that was essentially that. But we've been, price manipulated and accumulated for this entire time, and that is essentially it. You'll just recognize it's basically like not a pattern, but you'll recognize it as you start to study it more, you look for them more, and you'll be able to understand what side of the curve that price is in, and this can oftentimes help you generate a bias, look for entries and all of the above. Honestly, coming into every day when you're on the higher time frames, generate a daily bias. Understand whatever the higher time frame is doing, whether on buy or sell side of the curve, because this can be applicable to every type of time frame. This can be 5, 15, hourly, 4 hour, whatever the case may be. And when you're doing your top-down analysis, it is very important to look for this on the higher time frame, so you can then formulate your bias on the internal, and then from there you will look for the same exact thing inside of whatever higher time frame you're looking at. That's the beauty of it. I'm talking fast, my mouth get dry. That's the beauty of it. When you align these things, align the higher time frames with the internal, that is when you will get to the best, just the most efficient moves, the best moves, and the best risk to reward oftentimes. But that is literally it. Any questions, drop them in the comments. Anything you think I missed out on or I could have explained differently, let me know. Damn, my camera just glitched. But yeah, anything you think I should have explained differently or I could have, let me know. But that is essentially it though. Sell side, buy side. Sell side oftentimes to recognize it when price is just leaving, resting highs, when we're not taking the initial high before. You see us manipulating closer into a higher time frame area of interest. In this case, an higher time frame hourly fair value gap plus consequent encroachment with an SMT resting inside of it. 9 times out of 10, you're going to see price reverse from there. And this is the same for sell side. If this chart was upside down, it would be the same exact thing for a sell model. But yeah, I think I got everything I wanted to say. I try to keep it as quick as possible and as simple as possible. Simply, this is what you're looking for. And you're looking to enter on anything within buy side of the curve. Oftentimes for me, if I'm late, if I miss this initial entry, I would like to wait, or maybe some type of SMT to get put in right after, or maybe we see price come back down, chapter change in the state, get another inversion. I would then take an entry from here. If we put in an SMT at this low right here, get an inversion, that'll be another potential entry. It all depends on the price. It all depends on what we are given at the moment, but that is essentially it though. Basically, take a screenshot of this if you need to. This is literally what you will be looking for on a daily basis. This is how the market moves when it comes to ICT concepts and what you will be wanting to look for every single day. to me, it's kind of second nature now, so I didn't think that I needed to make a video on it, but I seen a lot of y'all asking about it, so I decided to bring it to y'all. And I hope y'all enjoyed. I hope that you learned from this. And I hope I did a decent job at explaining it. If y'all think I didn't, let me know. If I need to improve, let me know. But yeah, I'm taking all constructive criticism. I appreciate y'all for watching. Catch y'all on the next one. Like, comment, subscribe. Free Discord in the bio. And yeah. And one more thing, actually, before I end this video for good, I want to emphasize that it will not always be this easy. It will not always look this clean. It will not always be this A+. Sometimes you won't see it, and sometimes you won't understand. You won't be able to recognize what market maker model we're in or what side of the curve that we're in, and that's completely normal. The market is the market, and it will move however it moves, and it's up to you to just be reactive. It's not up to you to try to predict it. It's not up to you to try to anticipate. Only react when the market is dumb clear. It will not always look this easy. It will not always be this clear to you or in your face. You know, as you can see here, I did have the low resistance liquidity run marked out, but in this scenario right here, this doesn't really look like a bunch of stacked highs. As you can see, it's only two. We have an untapped for value gap here, and then the rest of these highs here. It won't always be that easy. It won't always be that clear. I want to emphasize that before I do it in the video. But yes, now with that being said, I will catch y'all in the next one. I hope y'all learn. I hope y'all enjoy this video. And yeah, any questions, anything that you feel like I need to re-explain or I could have explained better, just let me know in the comments. And I appreciate you all for watching, all the love and support I've been getting. Thank you so much. And yeah, I'm gonna catch you on the next one. Peace out.